Hello, and welcome back to Private Markets 360, S&P Global's podcast dedicated to enlightening and educating our listeners about the world of private markets from vast vantage points. Your Private Markets 360 co-hosts both sit within market intelligence. I'll start off with introductions. I'm Jocelyn Lewis, head of private debt commercial strategy.
And I'm Jocelyn's co-host, Chris Sparenberg, head of private markets commercial strategy. I'm a super fan of our corner of the investment industry. We're thrilled to bring our listeners exciting guests every month for discussions about industry trends and other topics of interest here on the podcast.
We sure are, Chris. And if you're interested in regular private markets content, hit subscribe and tune in. Ready to introduce our guest, Chris?
Let's do it. Today's guest is president of S&P Global Market Intelligence and a member of the executive committee of S&P Global. He's also deeply committed to driving a diverse workplace and has been recognized for his initiatives in diversity, equity, and inclusion, having been named in the 2021 Top 50 Advocate globally by Empower and Yahoo Finance. Welcome, Adam Kanzler, to Private Markets 360. Adam, thanks for joining us today. How are you?
I am great, and thank you for having me.
Well, we're excited to chat about a wide range of financial information products, services, and data analytics software solutions that S&P Market Intelligence provides for private markets participants.
That's great. I've been excited about private markets for many years. All different parts of my career have touched private markets in one way or another. And as we get started, I'm thrilled to talk to you about all of the different things we're doing within market intelligence and across S&P Global to serve the ever-growing private marketplace.
Fantastic. And that is a great segue, Adam, into our first question. So we thought it would be great just to start off to talk about the market intelligence business here at S&P Global. And for our audience specifically, share some of the ways that we serve the private markets industry participants.
Thanks, Jocelyn. And you know much of this because you sit at the center of many of the things that we do in market intelligence around private markets. We serve the participants in this market in a bunch of different ways, from the inception of an investment, helping them with diligence on companies that they might want to invest in, to once they've made an investment decision and hold it in a portfolio, providing software and portfolio monitoring and portfolio management tools. As they hold investments, we provide a valuation service that gives them an independent validation of the values at which they carry investments. And through disposition, we help them with all different types of research and information around M&A activity, exit activity, all the things that private market participants need to manage their portfolios. That cuts across private equity, private credit, secondaries, and across S&P Global, of course, as private investments like private credit can be rolled into instruments like CLOs, for example. We provide ratings on those types of vehicles and other services across the business, including benchmarks in our S&P Dow Jones Index business and supplemental information about the portfolio through the research tools available on CapIQ Pro, which is an extensive database of information around private companies globally. So lots of different places where we touch these private markets and offer services to the market participants that are investing more and more in this asset class.
It's so true that there are just so many different ways that S&P Global helps market participants in private markets. But one of the funny things is I still hear when people think of S&P Global, the first thing that they think of are ratings, because we have such a prominent hold in ratings. So, Adam, you must get asked this question all the time. But then when people start thinking about market intelligence, how do we make it so sticky for them that they'll think about everything that you just mentioned alongside ratings?
So in the private markets world, most of the credit is not rated, right? It does ultimately find its way into instruments that might be rated. And I think as private credit continues to grow, you'll see some of the services that we provide within our ratings group become highly relevant in helping portfolio managers understand their portfolio and have their investors understand the underlying holdings of the portfolio better. But those private market participants do lots of other things in their markets that have nothing to do with a credit rating, right? As I mentioned, they have portfolio management tools. They need to know what has happened at their portfolio company. They need to collect information from that portfolio company. They need to collect basic financial information.
Absolutely. So many different ways that we can help the private markets. And not to mention even all of the industry expertise that came over too when S&P acquired IHS Markit, particularly the legacy IHS business, where you have all of those experts that have deep, deep industry expertise that can also provide some consulting and services to help these private market participants understand some of the areas that they're investing in. So couldn't agree more. So many different ways we help out.
Adam, staying on the theme of how S&P serves private markets participants, we want to talk about reflecting on 2023 so far. When we look at the themes that have driven industry activity, there are a few come to mind that we're eager to hear your thoughts on. One is secondaries transactions, both the volume of them and what it might say about private asset valuations, the rise of private credit, as well as activity across the M&A landscape and what's happening in the IPO market. What's your perspective on some of these themes?
So these are really important themes, really important trends that are occurring in the market today. You've seen a real slowdown in deal activity through 2023. Some of the public company activity like M&A, IPO markets, these are the typical areas for exit for private market participants. So when that activity is slowed or valuations are off, you might see private capital firms holding on to their investments for a little bit longer. Not surprising that you're seeing significant capital raising for what people call secondaries funds, where people are raising capital in order to buy portfolios of private companies from existing private equity firms. Credit markets, similar story, right? The dislocation that you've seen in credit markets in general over the course of this year, a lot of volatility in interest rates, a lot of challenges for some of the traditional lending processes to be executed in a timely or efficient way. It's given a window for increased activity in private credit. So, of course, money following that, you see a lot of capital being raised for private credit funds. I think those trends will continue for some time because I think people have found that to be an efficient means of raising capital in what are maybe a little bit more volatile or a little more challenged markets. As the markets stabilize, we'll see how that ultimately plays out over the next couple of years. But in the meantime, I think it's a real opportunity for increased activity in private markets. For us, this highlights the importance of things like valuations, good operational capabilities within private firms. You see regulators globally starting to look at this space. You've seen a lot of activity in the UK. You're seeing activity with the SEC in the United States. I think you'll continue to see activity in global markets, just making sure that the right levels of transparency and discipline are there in what's becoming a very large market, where many of us, that may not even realize it, people that have pension investments and other investments where someone else manages the money, they may have portions of those portfolios allocated to private markets. So really just looking to ensure that the right levels of transparency and discipline are flowing through in what are becoming pretty large markets. The levels of activity that you've seen in this year, while slowed from peak periods of capital raising or capital deployment by private equity firms, are still high, still large amounts of capital being raised and deployed. And I think as you see markets stabilize, that trend will just continue.
And LP allocations are certainly following suit, continuing to expand across private markets.
They are. And Chris, I am hearing too that there's going to be more allocation from LPs to private markets, particularly private credit, given we're still in this high interest rate period and the risk return appears attractive. So we can also look there and see how, with that increasing, all these different solutions that we have, and the more and more we integrate our solutions, I think that our customers will have a better workflow for all of their data. So then as we look forward to 2024, Adam, what are your thoughts on what we can expect in the new year?
I had real expectations coming into 2023, most of which did not pan out. It turned out to be a more volatile and more challenging year than I think I expected. I think I feel less bad about it because I think it ended up being a more challenging year than just about anybody expected. For us, though, I think we continue to see increased demand for the kinds of tools and data sets that we provide. The more we're able to give insight for portfolio managers to know what they hold, right? This is a common phrase we hear today. And it's not just knowing the names or the latest financials of the companies they hold. It's understanding what's happening in that sector. What are the potential disruptive forces? Some of that deep expertise, Jocelyn, that you mentioned that we have across our firm, and in particular in certain sectors like technology and energy, and many others where we can bring unique insights into what's happening in a particular sector or how it might affect a particular company. I think in 2024, you're going to see more and more need for that kind of deep transparency and understanding by asset managers of what they hold. I think the next stage in evolution for private markets will also include a better understanding of the underlying data. And these are markets where companies report data often in different ways. They use different terms, sometimes for the same thing, sometimes the same terms for different things. These are highly fragmented markets. I think across the limited partner and investment dollar community, there's a desire for a greater level of standardization or greater level of understanding how to compare one versus another. I think with the right data transparency and all of the tools and market opportunity that comes with it, it wouldn't surprise me to see the size of that market triple or more.
And Adam, looking even further ahead, so 2024 and beyond, can you talk a bit about how S&P plans to expand? There are ways that we logically serve the market today that we could do at a higher scale, but there are also investments we can make in technology and other modalities to continue delivering greater insights, more data, and better decision-making support to our clients.
Yeah, I think the opportunity is huge. I just spoke a moment ago about the opportunity around the collection of data and the standardization of data. Now start to think about the ability to apply generative AI across those data sets. From our perspective, the ability to apply it across data sets that cross an industry, but even just from a portfolio manager's perspective, the ability to apply those tools across their portfolio with assistance of a model built across an industry to look for insights in what's happening in their portfolio, when the timing might be right for a particular type of transaction, what other companies might be in a similar situation that could be approached for, potential synergies, lots of opportunity to deploy what we're seeing today in large language models, generative AI. We're deploying it in some of our products. I think our customers will find that to be a very powerful tool in how they manage their portfolios. I also think basic automation tools like you see within our iLevel platform, but the ability to collect large amounts of data from portfolio companies on an automated basis, making that efficient and standardized, I think that will lead a next layer of transformation, because once collected in a more standardized and cleaned way, you allow for the operation of technology models, artificial intelligence to operate against those portfolios and provide all different types of insight. We sit in a really interesting space where we have so many of the customers within this market space. We have the attention of the most significant players in this market in order to work collaboratively with the industry to build new tools. And whether that's a data management tool, benchmarking capabilities, portfolio monitoring capabilities, understanding how they can most efficiently run the capital that needs to be deployed through their business. We have a front row seat or a seat at the table, however you want to phrase it, to work with those customers to design those new tools for what this industry will look like over the next 10 to 15 years and give those asset managers the right levels of efficiency so they can continue to drive great results for their customers. So I think it's pretty exciting time. I think technology is our friend. And I think we're in a really exciting spot to take advantage of that technology and deliver it out to our customers.
I agree with you. It's so exciting. And I think that it's going to change the current environment some way or another. I think that it's going to be super positive. But there are some people who are still questioning whether it will be as positive, I think, as some of us expect it to be. Do you have any thoughts for those that are maybe hesitant about utilizing AI?
Like all powerful things, in the wrong hands, it can be quite disruptive and damaging. Everyone's seen the impact of hallucinations or falsely generated information working from a large language model. At its core, the way that technology works is it's drawing from all historical experiences and plotting an answer, plotting a summary of what it has observed. So it is by definition looking at the data set that you've exposed it to and thinking that that's the state of the world and everything operates from that. We all know that the world changes all the time, and maybe looking at something from a particular historical data set doesn't give you a full picture of what can or should be. So in terms of our society and many other aspects of our society and commercial activity, while it holds great promise, it also has real limitations and some potential significant concerns. But I think when you have companies like S&P Global, certainly our approach is to use the technology to expand our customers' ability to access very broad data sets in a very efficient and rapid way. Depending on how the technology is deployed, the risk of something negative can be affected dramatically. I think when used for positive purposes or along the lines that I'm describing, it provides game-changing efficiency and opportunity for our customers in a very positive way.
For sure. As firms kind of mature and then people they transfer from one firm to another, and they still have that experience that they've gained previously. But now we're even going to be able to help them by using AI so that people can learn from these experiences. There's a lot of good that will come with this. Adam, thank you so much for providing insight on how S&P Global and S&P Global Market Intelligence are powering the global private markets and accelerating progress for our clients in a diverse number of ways. We are super excited for what the future holds.
Thanks both. It's been great to be here.
Thank you, Adam. Thank you again to our wonderful guest for a great chat today. We really appreciate everyone listening in. If you're looking for more private markets content, hit subscribe to catch future episodes and listen to our earlier episodes wherever you listen to podcasts. Cheers, everyone.
Thank you so much. You can also subscribe to our monthly Private Markets 360 newsletter. The link is in each episode bio, or connect with us on LinkedIn. Have a great day.